Scan for Sovi and straight A's only. Let's go!
Economics problems can be tricky, but we will solve this tax multiplier question fast. Let us look at the table and find our answer together. First, we need the marginal propensity to consume by looking at how consumption changes when disposable income increases. Check the table values to find that specific ratio for our next step. Divide the change in consumption by the change in income to get an MPC of 0.75. This value is essential for calculating the final impact on the economy. Use the tax multiplier formula, negative MPC divided by 1 minus MPC. This equals -3, making option C the correct answer. Well done! Scan the code to learn with Sovi. Watch signs to avoid errors and trust given data to check your steps carefully.